Yeah, exactly. So this is really more just a culmination. We've had some general questions just on Bitcoin, Bitcoin ETFs, and cryptocurrency in general. I'm going to focus more on Bitcoin, but we've seen now with Trump being elected and he launched his own meme coin and as well as Melania's meme coin. I'm not those I would just stay away from. I would just say that I'm not going to really do any analysis on it past that. But really, there's just been an uptick in overall interest in Bitcoin as well. Trump's floated a Bitcoin reserve in some sort. Whether that comes to fruition, I have no idea. But that's really where the interest is coming from. We've had questions related to Bitcoin, Bitcoin ETFs, how you should sell. Should you sell it? Should you hold it? Blah 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 blah. We'll just look at a high level view, look through it, and hopefully I can answer some of those questions here. And I will preface this with Bitcoin or any cryptocurrency for that matter has never been a keystone recommendation. We focus on stocks. Cryptocurrency isn't our bread and butter by any means. So moving on, likely part of the interest is just really due to Bitcoin's recent performance has been strong, setting a new all-time high over this past weekend at roughly 109,000. And over the past year, the total return is about 165%, stoking more of this investment interest with continued high returns. And it's currently trading at about $105,000 a coin. But by the time you're listening to this, that is probably way off because it is cryptocurrency. So a quick overview of really Bitcoin ETFs, the pros and cons. If you are looking to invest in Bitcoin, the biggest benefit of using an ETF is really just the ease of use. With self-custody or holding Bitcoin through a cryptocurrency exchange, it comes with various risks, and it's just generally more complicated for most people. So if you just don't want to deal with that, as you can make mistakes in transferring or purchasing, losing your keys, which is effectively the same as losing your wallet of cash, amongst other hurdles, if you wish to go that route. But a lot of people just don't want to do that. So ease of use when it comes to ETFs. These are not really impossible hurdles across, but just this really more peace of mind by letting our third party handle or hold your investment if your point of holding Bitcoin is to hold it as an investment. A couple of the drawbacks, however, of ETFs is you are getting someone else to hold your investment. They're going to want something in exchange. You're going to pay a fee or a MER, managed expense ratio. And you can only trade during normal stock market hours, unlike where if you have self-custody or through a cryptocurrency exchange, it'll be 24/7. And like I was saying before, Bitcoin's at an all-time high over the weekend. An ETF wouldn't be able to sell during that time. You are restricted to normal stock market trading hours, depending on, of course, which exchange you are buying it on, whether it's in Canada or the US or abroad. But if you are looking at Bitcoin purely as an investment asset, not to use it like a currency, then ETFs are likely suitable for you just because they're so much easier and the fees aren't significant compared to the assets, just general volatility. So just over a year ago now, in the US spot, Bitcoin ETFs were listed. They had some futures, which are derivative-based ones prior to that, but they've only had spot Bitcoin ETFs since last year. And prior to that, Bitcoin ETFs were actually listed in Canada prior to the US. But recently, BlackRock launched a Canadian Bitcoin ETF symbol IBIT that is linked to their American one. And it looks to be the lowest fee in Canada at this time at 0.32%, tied with Fidelity Bitcoin ETF FBTC, as they quickly followed BlackRock's lead, lowering its fee to the 0.32% as well. The other benefit, though, which I really want to highlight and reason why I'm really bringing this up is since it is linked to their American-based ETF, it will generally result in a lower bid-ask spread, which was a bit of a concern when you were looking at the Canadian ones a year ago, as well as they just weren't as liquid in general. So if you had a larger position, you want to buy it all at once and through a market order, it might have moved it a bit more. You might have had a bit more slippage. So, and it's just generally good to see a bit more competition in the Canadian ETF spaces. Overall, they were just worse than the American offerings. So if you're comparing the Canadian to the US Bitcoin offerings this time last year, even though the US ones just came onto the market, they were lower fees, lower bid-ask spreads, higher liquidity than effectively all the Canadian ones by quite a bit. But overall, if you are looking between one Bitcoin ETF compared to another, there's not really much of a difference. The only real difference is that MER. Past that, you have your bid-ask spread, which are all effectively a penny at this point, or maybe 2 pennies at the time. So really nothing there. And then the other difference, which you can consider maybe, is the custody. So BlackRock doesn't actually hold custody of the Bitcoin, But for the most part, it's just all through Coinbase. Fidelity does do their own custody, but for the most part, it is just purely Coinbase custody. So even there, not much difference. So look at the feed, but don't stress too much about it, as it's very minor difference. A lot of them are within a fraction of percent, and you're looking at upwards of like 10 basis points for the US difference at this point, if you're excluding grayscale, which I'm not getting into now, but they're higher for a reason, just because of historic reasons. But it's not that big of a deal. So if you do see one provider lower their fees by 0.01%, don't freak out. You don't need to switch. Likely, if you're trading through a bank, your trading fees are going to be higher than what you'd actually save from the MER differences. However, changing pace for the next couple of slides, really, why would you want to hold Bitcoin in the first place in a multi-asset portfolio? Traditionally, you've probably heard of the 60-40 portfolio, 60% equity, 40% bonds, as different asset classes have lower correlations with one another. So that can result you in having a higher risk-adjusted return. Aaron actually did a segment on it with international markets not long ago. So really, a lot of people and institutional investors are really looking at, can Bitcoin be used as a diversification asset to increase your risk-adjusted return? And I will say, and this is all based on correlation. So Bitcoin can be used in a similar sense. If you don't have perfect correlation, it will have some diversification benefits. And the lower correlation, which is 0, is the lowest possible. It means it's completely uncorrelated, would be the best for this practice, but that doesn't really happen in the actual financial markets. And as you can see here on this chart, correlation between assets does shift over time. It's a statistical relationship based on price. So it will shift over time. And this is a 30-day rolling correlation, which I have up here over the past 5 years. And as you can see here, it's not consistent on a 30-day basis, with correlation dropping slightly negative at points, being slightly inverse correlated. And it has actually a high correlation of 0.8 at its peak on this graph. So it does shift over time. It's not going to always stay that same. So if you are looking at some quantitative arbitrage, which is well past the point of this presentation, that is something to consider, but that is well even past what I would do. But for the most part, I will say on the long term, if you do a longer term correlation past 30 days, this is rolling correlation, you can do that for really any period of time. It kind of hovers around 0.4 for the last few years. So it's not an exceedingly strong correlation, but it is still a positive correlation nonetheless. But you can ultimately use it for increased diversification. I'm not really going to go into how to implement a modern portfolio theory, as it does get complicated and it's really out of the scope of this segment. As well, it depends on your other holdings and a myriad of other factors in reality. But the point here is just to show that there is some diversification benefit based on historic price movements, which I will also say the standard caveat, past performance isn't indicative of future performance, but it does at least historically have some sort of a diversification benefit, since it has a relatively low correlation with S&P 500 as well as other assets. Now, looking at Bitcoin volatility, it is a volatile asset to say the least. However, volatility has been slowly trending down over the long term, which isn't surprising, as higher value assets tend to have lower volatility. The more people you have in the market, the less volatile it is in general. But Bitcoin is still very high volatility. So if you analyze the volatility over the past 30 days, is about 43%. And just for a point of reference, the S&P 500 over the last 30 days was about 15%. So even though Bitcoin volatility has trended down, it is still a highly volatile asset. It's much more risky than a stock market index. And even if you compared it to individual stocks, it is more volatile than most, especially during market stress period. So you can see on the left side of this graph, that big spike up, that was the onset of the COVID pandemic. And when you analyze that volatility, even though it doesn't show it here, I think for a very brief period of time, it was actually over 200%, depending on your correlation or your volatility period. So extremely high volatility at certain times, especially when there's market stressors. So next, we can look at actually the drawdowns, which is a bit simpler since it's not a complicated stat. And it's really just how much the price fell from its prior all-time high. In this chart, you can see Bitcoin has repeatedly fallen significantly, with the most recent major drawdown being roughly 75% from its peak. And if you go all the way back to 2012, even though it was a very structurally different market, Bitcoin actually fell over 90%. So if you do hold Bitcoin, whether through an ETF or otherwise, you really need to accept the high likely possibility that you could lose the majority of your capital, at least for a period of time, if the historic pattern holds true, which of course it may not. But it really does show that if you are willing to hold Bitcoin or any really high volatility asset, expect your dollar value to drop significantly, even over a couple years, like you can see here. Even a few years ago, you were looking at a 75% drawdown. That would have been when FTX collapsed. And really, just a couple points to tie this all together, as it is a bit of a generalized segment. If you do look to invest in Bitcoin, look at the risk of holding it. ETFs are a suitable way to hold Bitcoin as an investment. And what I would say is the easiest risk management approach is really position sizing. Don't bite off more than you can chew. Assume Bitcoin can and will drop by at least 70% or more, or even more. Just assume it can effectively drop to zero. Assume worst case scenario that valuation can go to zero, like everything. But given the overall volatility, that's likely has more of a chance to go to nearly effectively zero. It's unlikely to go to zero, but 0.001% is zero in my books. Also, the larger position you have, it has a fewer diversification benefits. That's true for any asset, as when you have a larger position relative to your portfolio, it will have a higher correlation with your portfolio, reducing the diversification benefits. So set a rough position size maximum. If it exceeds it, then lower your position to lower the concentration risk, which lowers your portfolio's overall volatility. Obviously, what people are comfortable with will vary, but a general initial position will likely be in the low single-digit percentage, 1 to 3%. Since it does have such high volatility, you'll see that number, it will maybe 1, 2, or 3% on where you read online. But the reason why this is because once you get above that, you'll start to have a significant portion of your portfolio's risk concentrated just on Bitcoin. So if you got to like 10, 20%, much of your portfolio's movement will just be purely based on Bitcoin, which, as I showed, is very erratic, even over short periods of time. But ultimately, invest in what you're comfortable in with. If you do believe in Bitcoin, is that it is going to fall to zero and has no value in it intrinsically, and it's just going to trend to zero as a scam, or however you do believe that, simply just don't allocate towards it. But if you are someone who is overly bullish on Bitcoin, really measure your risk. Make sure you can actually afford to take that risk. No asset is guaranteed to have high returns just because they did in the past. And as well, don't have a fear of missing out when you do see these high returns, as that can just purely lead to poor investment decisions. So I'll open it up to you guys here if you had any comments.
Yeah, it's interesting seeing the correlation for sure. I like that you did that, and I know that I gave you kudos when we published the report, the Bitcoin report, to clients. Again, not making a recommendation, but just giving them some good information essentially
Yeah,
if they
and
are interested.
Yeah, I
it
think that
was
we've said, we've never said don't have Bitcoin, but don't make it,
Mhm.
a massive part of your portfolio. Just like with gold or anything else, it can you can have an allocation. Not everybody necessarily needs to, but we would say 5%, not 50.
Mhm.
Yeah, and certainly there's a lot of headline news. I mean, the
Yeah.
Melania, the
Yeah.
Trump, Bitcoin that came out. Yeah, I mean, if you want to buy cryptocurrency, stick with the big names. If you're going to do that, as it is, there are a lot of scams out there right now, and people are losing significantly. They're seeing big profits, but I don't think you're seeing the losses on the flip side in some of these companies. So I'd beware, or not companies, in some of these coins.
Yeah,
Mm-hmm.
it's exactly like what Ryan was saying. Is Bitcoin is kind of on its own. Then you have like Ethereum and a couple other kind of middle tier ones, but then a lot of them are just, if not outright scams, they're just bad investments.
Or just
as simple as
worthless,
that.
basically. Yeah,
Exactly. Like
there's no way to assign value
nothing
to
more
it.
to them than that.
Yeah, I think I've said maybe this story on the podcast before, but one of my buddies was at a party, and he was talking about, Bitcoin, and just asking them like, oh, do you own any Bitcoin? And they're like, you don't want to own Bitcoin. You want to own, this, shit coin, basically is what they're called. And the reason being is because it was trading at 0.000001 of a penny. And it's, the thought process behind this
How could it
individual
not go higher?
is,
Well,
well,
it's
exactly.
There you
guaranteed.
go.
If it goes to a penny, then I'm going to be an absolute millionaire, and it should be easy
Mhm.
for it to go to a penny. Again,
Which
it's
is the
just
It's just a penny.
thing that most penny stock investors think, right? I mean, they'll look at a company that's trading at $50 and say, well, that's expensive. Not really taking into account that it's maybe trading at a very attractive valuation relative to its cash flow, but they'll gravitate towards a company that's trading for pennies because there's speculative upside of overnight doubling your money. Right?
We know a lot of companies that are trading at $100 plus that are cheap, and a lot of companies that are trading at 10 cents or other that are under or that are expensive. So
there was that one story too about Boyd, which I know that Ryan told me the story where there was an individual who basically was saying, I don't want to invest in Boyd because it's trading at $100 per share. How am I supposed to make a nice return off that? And it ended up doubling that year, I believe to $200. So again, you got to look at value, not price. We say it all the time.
Yeah, well, Microsoft has gone from 98 to, where is it today? 400. And I mean, it really doesn't, it's value, not price that we're looking at. I mean, and again, there's a lot of really expensive stocks trading at 5 cents on the TSX Venture, and you shouldn't be touching those with a 10.
Ironically, they're the most expensive.
Yes, it's crazy.